The first section of this presentation will be on portfolio simulation. It's actually about taking a strategy and running it through a portfolio simulator, sort of real life. And then we'll move on to the next step from that and pop that into the real-time alerting area for those of you on real-time and eSignal, just to see how you set that up in there and how those alerts work. Some of you will be familiar with that if you're using the real-time system, but it's a good refresher. And then in the last 15 minutes, David Wozniak of TFR Trader, that's Trading Floor Research, will come on and be doing some fibs and that expands on what he presented in the last presentation to us, which was really great. I really like that, the Fibonacci on the market over a very long time span, and there's some great insight there. So that'll be in the last sort of 15 minutes of my presentation. So around about 2:45 Pacific or 5:45 for Eastern, or I'm sure you can figure out wherever else you may be, what time that will be. So first off, just refresher here. Many of you will have been on 9.6 if you're on the end of day version only. If you're a real-time user, you will have this version, 9.51. You won't have this little icon here. This OES is a leftover from a options program we used to have that has now been mothballed for many years. I just happen to have that in there for some testing. So right now, in 9.51, the difference between that and the end of day version is these icons on the right here. The quotes montage, we're all used to quotes montage in various platforms. Of course, we have that in here too. And the real-time alerting area, that is where we'll be spending the time today. Now, real-time alerting is where we are able not only to look at real-time charts on whatever tickers you are following, but where we can also take any of the existing strategies that we have within the system, plus any strategies we wish to create, and put them in there so we will get alerts, audible alerts, and they pop up on the screen as well when we're in the market is open and there's trades going on. And again, we'll see that in a little bit. So right now, we launched a portfolio manager. I've obviously set this up beforehand so that it makes it easier for us to go through the process here, and we don't have to wait for me to fill in all the parameters in the system. The system itself, a portfolio manager, is really just a portfolio management tool. It's pretty comprehensive, but it includes sort of a secondary view called portfolio simulation. And it's this portfolio simulation area that we have the ability to do real life testing of a strategy. Problem with most back testing strategies is they don't put real life constraints upon the testing parameters. So when you have a strategy, whether it's something that is out in the general marketplace or something that's within the system, when you run it through our expert design studio here and you run tests, and this is true of many trading system testing platforms, you will get all the trades. You can have exit and entry strategies and things like that, but real life constraints are what we don't have, or what you don't have when you're just testing a strategy to start with. Because primarily when you start testing a strategy, you're really looking for a strategy's effectiveness and how many, does it win more than it loses? Does it make more money than the market? I mean, these are all things that we're interested in, and that's important for getting a trading strategy beyond that initial testing phase and then into the next phase. So briefly here, when I actually launched that expert design studio, the strategy that we're going to look at today, and this is something we looked at in a prior session, was a candlestick kicker strategy that works quite well for long trades. We didn't look at the short side. This was just purely for long trades. This coding here, you don't have to worry about the coding. This is all available either within your system, or we can get you a copy of this strategy sent to you so that you can actually look at it yourself. So in Expert Design Studio here, obviously, if you've been in here, you know that you have strategy, you can run the back test on it in here. There's a back test area here. I've already done that. And you can see, number of winners versus number of losers over a different period of time. And so that's an initial stage. For example, here, I did a strategy when we did this back in March of this year. We looked at the candlesticks kicker strategy, and we tested it against the S&P 500 stocks. And the strategy itself is, it's a very specific candle strategy. And in that 2-year period, more winners and losers. And, we outdid the market. So did pretty good. I mean, it's not hundreds of times greater than the market, but it did outdo buying and holding the S&P 500 over that period from 330.20 through 330.22, and that's been a pretty volatile market. We've had a good bull run and a bit of a bad run, and of course all sorts of things in between. So that was the initial thing. Strategies within the system itself are all available, file and open, and you can actually find them in EDS strategies, which is in your WinTest 3.2 folder on your drive. So when you go down in here on your local disk, WinTest 3.2 EDS strategies. About 200 strategies in there. Any of those you can run in here and test yourself. If you want to get tutorials and a reminder on how to test these strategies on the website, AIQsystems.com. If you go to the education link, you'll see there are tutorial movies on how to not only run these sort of strategies, but build your own. So today, this strategy was modestly effective. That's 41.32% average annual return. That's not bad over those 2 years. So, but of course, that's just running a test on a strategy, straightforward, holding for X number of periods, nothing fancy on exit or entry. The next step when you really want to test a strategy is to put some real life constraints on it. So taking exactly the same strategy is where we then utilize the portfolio manager. So we go straight to the little button here, portfolio, and this will launch this portfolio manager up here. There are 2 views in the portfolio manager. You have a regular view accounts view here, which is where your own accounts can be put in here, your own trades. You can apply stops and all sorts of different portfolio management tools within this part of the program here. It even applies dividends. If you get cash payouts on different tickers you hold, stock splits, all of those things can be handled in there. But it has a second view, as I was saying at the start of this session, and this second view here is called simulation. So what simulation does, it takes all of the tools that are available to us as portfolio management, which is obviously, profit and loss, stops, and putting money back into the account so you know how much you have to trade. But then it also allows us to say, hey, let's run a test. Let's pretend we're trading a particular strategy and we'll run it over a period of time. And we'll pretend to trade it like it's a real system, like we're actually trading it every single day. Obviously, it's not walk forward. This is go back to a certain date, and then you walk forward every single day. So this is in a nutshell, it works like this. You have a trading system. You say, this is a good trust system, like the candlestick kicker. We run it from a particular date. It says, okay, on day 1, you have how much money? Okay, you have this much money. Has the system fired a buy alert on a database of stocks? Yes, okay. What percentage of my portfolio should I put into each position? Should I use all of it? How many open positions should I have at any given time? So all of these constraints are put in there, and then it moves forward day after day when you get a position that's exited, depending on what your exit strategy might be. Just like in real life, then it exits from the position. That money from that trade goes back into your pool of cash, and then it runs the strategy again. It says, oh, we've got X number of dollars left. Let's run our constraints, and we'll go again. The difference between this and just what I call a basic standard backtesting is that with constraints, you're really doing it the way you would trade a system properly. Because a lot of systems I've come across over 30 years of checking out strategies, there are little, what I call hotspots, where it looks like a great trading system when you test it over a long period of time. But then if you go in and look at the trading system itself and you sort it by entry date, you suddenly find that on 1 or 2 different days, there's 50 or 60 different stocks fire at the same time. And of course, in a vanilla back test, it just says, hey, we'll buy the lot. But we know that we probably don't. I mean, unless you're a very big money manager and you've got a lot of resources and money, you're not going to buy 60, 70 stocks in one day and then exit it over the next few days, weeks, or whatever. So real life constraints is what the simulator allows us to do. So let's just run through what happens in here and how we get to a real life result by using this simulation tool. So quickly back to this strategy here. As I said, this was a candlestick kicker. Not going to go into the details of the strategy, just to know that we had more winners and losers initially, and it seems to be buy and hold the market. So it's a good place to start from. So this same strategy is called candlestick kicker, is what will feed into the portfolio simulation tool here. Initially, you create yourself an account like you're making a portfolio account. In this case, I just called it candle. What then happens is we get a process that we'll walk through to set up our constraints when we're going to be doing this walk forward testing. So in properties, when you create a new simulation, it brings up a screen like this. So you name the account, obviously, and a description. If you want a description, that's good too. The next thing is, I go straight down the bottom here just to, before we go to the strategy. You'll notice we've got UK here. That's for our UK folks. The available cash is the first thing I put in here. I put 100,000, a good place to start from. If you want to do less, that's fine, but be realistic. I mean, what are you going to devote to a strategy if you're going to try and test and then think about trading the strategy going forward? Do you only want to put 20,000 towards this strategy and the other money is doing different strategies? I mean, that's, diversification. So in this particular instance, I'm throwing 100,000 in here. Notice the start date and the end date. I would advise you to try different periods that actually allow us to be both in a bullish and a bearish market so that we can cover all of those angles. Because remember, this is a bullish strategy. So we want to see what happens. We want to see if this thing is going to work. If it fires in a bearish market, is it going to keep going and have losing trades because the market is dragging it down? So in this case, I put it over a 5-year period. So that's a pretty long period. And the market I'm comparing it against right here is the S&P 500 or the SPX index. I just need to know if it's going to be as good as or better than that. Couple of things here. This is just for calculations when it does statistics at the end. And once we get to the end of a testing period, do we want to include any period stocks that are still not closed out yet? Because by the time we get to 729 running the test, there's bound to be some positions still open. So yeah, leave those in there is what I do. Here, again, we're not doing any shorting, although this is set to 50, so we don't have to use that. Use prior past 1 results. Don't have to worry about that too much unless you have an extremely complex reiterative trading system, which can save time. If you have you click on that, it'll save the previous base results as you make some modifications to your strategy. So that's initial constraints. The next thing we need to say, okay, what strategy do we want this simulator to work on? And in this case, we would literally just click on new and go find our EDS file. And what I did here was, and I'll just click on the editor, the strategy itself is the name of the strategy, and here's the file path. So you saw when we were in Expert Design Studio, there's the pathway and there's the name of the same strategy. So we're feeding in that same strategy that we were looking at in Expert Design Studio. So next up for us is, once this strategy is in here, we need to put the extra constraints on there. So first up, and even though this has got exit first and entry, we'll go to entry first, because entry is what we're interested in the system telling us, what is it you're going to do? Which part of this strategy is the entry? So in here, you'll see this pull down box that says entry rule. You notice there's a whole bunch of different components in here. These are all separate segments of the strategy. We're not interested in any of those except for the long kicker. And that's the final part of the strategy right here. So you'd select that and you'd click OK, and that would be the entry rule. A more complex area, this is called ranking and tiebreaker user-defined functions. That's what UDF is concerned with. This is one of those cases where if you get more stocks than you anticipated, you could have like a runoff. So it'd be like there'd be a close run race, and you'd have to have a runoff to see which of the two stocks is the best to go with. And that would be a more complex or a secondary set of rules. For example, if you had two stocks, or say you have 10 stocks that fired today, you could then say, okay, I only want those that have a high, pick the two highest MACDs. And then you could do it that way, in which case it would ignore the others. We won't be doing any of that sort of complex area at the moment. What we will do is go to our exit strategy. Exiting is very similar to what you have when you just do vanilla back testing. You can do trading stops. You can protect 80% or whatever number you want of your initial capital. You can then protect a certain percentage of an initial profit that you've made. So when it goes up and then falls back, very, in the same sort of vein as trading stops. You could also, for a more complex exiting strategy, if you have an exit rule that you want to follow, then that rule would need to be inside this candlestick kicker file so that you could then say, after X number of days in a position, when that rule fires, exit me. So this is very similar still to a standard back testing. How do I get in? How do I get out? What's different in Portfolio Manager is the capitalization rules. What happens here is if you don't want to use capitalization, then it'd be just back like doing could you unmute yourself, please?
Yes, can you hear me?
Yes, if you could mute yourself, please. Thank you. Yeah, so in here, we're going to use capitalization rules. And this is the heart of what I would call the walk forward testing, because here is where you decide what percentage of the amount of money you have in pool of cash that you want to invest in any given day when the rules fire. So if we start out with $100,000, if you only want to put 10% of that value, you can make that as low as you wish or higher, then that will constrain exactly what the system will do when it's running the testing. So in this case, we're going to say, hey, I only want ever to put 10% of my portfolio value at any given time into any single position. And then it recomputes it every 20 days. Or you can specify that, or you can specify to compute when the portfolio value has changed by a certain percentage. So hopefully the portfolio value will be growing, and so you can use that as a key off for the amount you're going to invest in each position. So another one here, allow partial entry, but never less than X number of shares. So I don't want lots of micro share positions out there. I'm not very interested in that. So no less than 50 shares is good. Some people like higher. This is the key one here. How many new trades can you put on in one day? If you don't care about that, switch it off. If you think you can put on more than that in every single day, I mean, it's not always going to fire every single day, remember. So that's another one you can configure to your needs. And this is the big one here. How many open positions do you want to manage at any given time? Is 10 open positions? Is 20? Is 5 enough? These constraints are real-life constraints on our time and our ability to act decisively. I mean, if you've got 50 open trades at one time, you'll be managing this pretty aggressively during the day. If you're like me and I have a business and other businesses to run, I don't have that much time. So I will never have more than 10 open positions. Even 10 is quite a few. So bear that in mind. And there's another constraint here, maintain capital reserves of at least 400. So, that's $400. They don't go below that level. I don't like pyramiding positions. Pyramiding positions is, for example, if it bought on day one, it bought IBM, and then you're still in a position because it's going well. If 7 days later, IBM fires again, it will still buy it even if the IBM is still in an open position. So then you start getting a little bit of bias towards one or two stocks. In that case, you could end up in a hypothetical situation with a slightly imbalanced number of shares of one or two given stocks. So unlikely to happen if you're only having 10 open positions, but if you have more than that, it's possible. So I leave that one switched off, no pyramiding. So we have the rule, candlestick kicker. It's it's a standard candlestick strategy. We know it's fairly effective in the back test. We've now applied some real life constraints in here for the testing period. And we're still just testing at the moment. The other tabs here, pricing, you can do complex rules on the entry and the next open. We're just going to enter the next morning. Because remember, we're testing end of day. So this kicker fires, and then you go into the next day at the open. And that's all we're going to do for this walk forward simulation. What are we doing it on? What are the tickers? In this case, I did it on all tickers in my database. I'd suggest a smaller database. S&P 500 is a good place to start from. And time interval, right now, daily and weekly is all that's available. These real-time ones are not available in the system because the ability to store real-time data locally was discontinued for us, so we don't have those at the moment. By the way, if it was a short strategy, you'd need to specify that here. So that's the constraints. That's how the system starts itself up. You then literally run the strategy from here. And once it's run, and I mean, if it's a big database, it's going to be, it's going to take, depends how fast your computer is or how complex the strategy. It could take 3 to 4 minutes. If it's a faster computer, it may be less than that. So let it run. It does a performance. You'll see the little bar on the bottom here. I'm not going to do that right now because I prepared this earlier. This very strategy testing over these 5 years. And when it finished, it pops up the statistics, which you can always go back and see here. And this is the actual statistics that popped up when I ran that test over 5 years with those constraints in place for us. I'm just going to wait for it to come up here because it's just collating that data again. So this is where, this is the heart of what's going on here. 5-year period, bullish and bearish market periods, candlestick kicker. Again, is this tradable? Look at the number of trades now. Over a 5-year period, this is only traded 289. So we're only talking, let's say that's 300, and over 5 years, that's 60 trades a year. Not too bad. The winners outdid the losers substantially. They really did. There was, a pretty good winner here. There was a moderate loser. Remember, the losers were protected by our initial profit protection, but it can't save us if, the stock overnight drops 20, 25%. But it does get us out when things go against us. The other thing here is what's the average profit and loss? 2.45% on the positions that it traded. The average profit and loss on the S&P at that same period, so every one of those trades, if you bought the S&P or say the SPDR as a surrogate, you'd have lost money. So this is a moderately good strategy. It's not huge. It gives an average annual return of 13% over 5 years through a bull and into our bearish market here. So from a drop dead date of 2017 up to the end of July, 100,000 becomes 191,000. And then this is standardized testing taken to the next level. You notice down the bottom here, all of the criteria and constraints that we put in place are all available on here. So you can actually see what it is that it bought and sold. In this particular case, I put in stocks from different exchanges just to show that this actually has London and US and Canadian stocks in there. It'll work on whatever stocks you have in your marketplace. And you can control that by that screen when we were saying what tickers are we doing it on. I did it on all tickers. You could do it on S&P 500, or you could do it on like Russell 2000, whatever list of tickers you wanted to go with. So if we have a quick look here at the transactions, because remember, it just uses a regular portfolio tool to run this walk forward testing from that day. So when I click OK here, just like in a real portfolio, it has the transactions themselves. It's got the bought and sold of each of the tickers, the number of shares, And all of that information, including the journal here, everything in here, those positions that are closed, everything is in here, just like in a real portfolio. You can see the entry and exit date and the profit and loss is all in there and all sortable. So you can actually see all that information. And again, this was just like a real portfolio, but we've done it in a test mode and we put those constraints on there. So the next step in here is if we go and have a look at this strategy that we know works, we can also go and say, okay, so we like the strategy. It's modest. It's not making a huge amount of money. We could tweak it and look at having more positions, maybe tightening up some of the constraints to cut down on the losses. We could probably increase the percentage from there. However, in this circumstance, if we go to this real time and have a look in RT alerts, we can actually take this strategy and say, okay, this is a great strategy. Let's go ahead and pop it inside our real-time alerts and let it fire and see if this fires on any stocks. So a couple of points to remember before we go into that area. When I go back into the statistics here, the number of trades that fired, right? We were talking about 300 trades, 60 trades in a year. So with 220 trading days, it doesn't trade that often, right? So we may not, when we go into portfolio, see this happening on a daily basis, but we can pop it in there and pop in a couple of other strategies and see them actually firing on different time periods. Right, so we're going to go into the RT alerts next. So from the menu, RT alerts is right here. For those of you, as I say, if you're on the end of day program, you will not have seen this alerts, or you may have had the alerts in the past. Brief overview of what you're looking at here. So real-time alerts is a charting area that also has alerting built in. And the tickers, just like you do in regular charts, you can see a list of the tickers on the left here. And on the right-hand side here, we have the regular control panel. In this case, we've defaulted to a daily chart. If you're doing the real time, you'll notice here we have 60, 30, 12, 5, or you can define your own buttons themselves. So in the case down the bottom, the difference here is connected to interactive data, which is connected to eSignal. This actually has a built-in eSignal data manager that grabs the real-time data directly from eSignal and populates the charts here. When I click on one of these up here, you'll notice what happens immediately. It switches to a real-time view. So for example, here's Caterpillar, 30-minute chart. All of the indicators are then based upon the 30-minute price bars, just as you expect in a real-time charting system. In this case, I've switched it to candlestick view, and the strategy itself that we've been looking at, the candlestick kicker, I'm just going to show you how you would put this in here. How do I go about moving from expert design studio, basic testing, portfolio simulation, real life constraints, like what it's doing? Let's apply it to a list of stocks. And again, I'm running this real time. If I have the highest level of service in here, I'd have a much bigger level list of tickers I can run it on. In this case, I'm just using a handful. So how would we add it? Well, we go to File and we go down to Alert Properties. So within alert properties itself, first thing, going to make sure this is enabled if you want alerts to happen. I already have Bollinger Bands. See when you got this little sound icon here. I have Bollinger Band Squeeze, which is the name of this strategy, already enabled in here. To add in a strategy that's not already in this list, and you'll notice that there's a whole bunch already in here, I will need to go into Edit Alerts. And I literally need to go and say, hey, well, you know what? In this EDS strategy, remember, we're still using the same strategy. In the strategy in here, the rule library here has it. We only want the bullish bit. That's all we're doing at the moment. I would literally just copy this bit. I could take the whole up and I'd copy it and go back into real-time alerts here. go down the bottom here and paste it like I just did here. See where it is? Candlestick kicker. Bullish 3 descending solid candles, then the fourth candle, the low must be above the highest point of the previous day's candle. So that's really all the strategy is. I paste it in here. I test it for errors. It says no errors. That's a great thing. Click OK on that. And then once that's set, and I click OK, I make sure it's enabled. In this case, I have already done this, of course. Candlestick kicker. It's under long kicker. There it is right there. Literally right click and alert enabled. Once that's done, apply and click OK. And then the alerts will be available for you. They'll appear down the bottom here. They literally will appear down the bottom here. Now, here's the thing, the great thing with the alerts. If you want to think about the system over a different time period other than daily, when we're in the daily view here, so remember, we've got candlestick kicker and Bollinger squeeze actually enabled at the moment. When we click on that, it actually runs through all the stocks in there to see if either of those strategies or any number of strategies has fired. And it will kick off the alert down on the bottom of the screen here. So you can see here, different ticker are fired on a different date. In this case, this is a timing. So these were 5-minute ones. When I switch to a 5-minute view, it'll run the strategy over 5 minutes. It doesn't matter. You know, bars are bars, price bars are price bars. Even though it's a daily strategy, you know, it doesn't know any difference except when you switch to like 30-minute here. So it's a 30-minute bars. So it looks for three 30-minute bars, and then the fourth bar is above the high, or the low is above the high of the 3 descending ones. As simple as that. So on a daily, if it's just going to be daily, then you just stay in daily. You'd have your list of tickers here, and it would fire up here and fire up a noise as soon as the strategy hits. And it can happen during the day itself. So this is a great way of, if you want to be a little more reactive in doing this, i.e. you could get in on a strategy on the day it's actually firing rather than the next morning's open. If you're in the end of day version, back in here into the portfolio manager, guess what? You can do, you can take the strategy and do what's called pick of the day. So pick of the day, which is back in the, let me get back into here a moment. Run pick of the day. So if I run pick of the day, it'll actually allow me to run that strategy, which is the candle strategy, every single day. When I click run, I'm not going to do this right now because I don't have the data updated. It'll run the strategy for the most recent closing data you have, and it'll tell you the stocks that to go buy. Because remember, this thing's fired 300 times in 5 years. So it's going to be once a week, maybe once every 3 or 4 days, you'll get a stock fire. You can just run this and bang, there's a stock that meets all of that candlestick kicker rule, meets your pricing constraint. So you have the amount of money in there. You know, if you already have 10 open positions like me, it won't fire. So it's a very, very good way for using this strategy you've taken from its infancy through its standard testing, through advanced real life testing, and then you can run it in here as a pick of the day. So back into real-time alerts here, I just want to show you, because that candlestick pattern, as I say, it doesn't fire all the time, so haven't seen it fire in here since I popped it in here early this afternoon. So that's why I put the Bollinger Band one on, because that did fire. And as soon as I switched, so if I clear these alerts out in here at the moment, let's delete alerts. So as soon as I switch to another time frame, watch what happens. So there's data. We're connected to a server. Remember, we stream all that real-time data in here and store it in the system in a cache area. It disappears on the real-time once you shut down or exit. But if I switch to a time frame like 5 minutes right here, notice immediately on Caterpillar, we had a Bollinger Band squeeze on the 5-minute bars, and that actually happened at 14:20. So it sees that stuff ahead of time. So you actually have it in. Here's the squeeze itself actually on Caterpillar. You can see it beginning to squeeze. And of course, there's just data. There's no data coming in at the moment there. So it's sort of flatlined. This is not set. Yeah, this one has after hours data coming in. So if we switch to here's BA, Notice the same again, and again, it's because there's we have this after hours flatline data coming in. I can actually configure that to get rid of that so we wouldn't see it. When we switch back to daily, and let's have a look and see if any of these are fired on the daily. There's V. Here we go. Let's go down to Visa. So Visa on a daily chart has a Bollinger Band squeeze at there it is, 8:10, of course, today's day. And there's the squeeze that's just started to happen right there. So literally those alerts are in there. If you're running this system during the day, this data, any of the alerts you have in here will be firing and appearing down the bottom here. So we've really gone through simulation and real-time alerts. For clients, as I say, we have probably half our clients are on real time and half are not on real time. So this was a good opportunity just to remind folk that this capability that is within here. Obviously, all the drawing tools that you have in the regular charting are in here as well. The key thing here is, of course, that the data is streaming in. And the other key thing is when you're looking at a daily chart, right, like Caterpillar here, during the day when the market is open, this is the current trading bar, so actual trades are coming in. So that does make it more reactive when you have a trading alert system rather than waiting for the end of day and then waiting for the following morning to enter a position. So any questions on what we've covered here? As I say, it is a more advanced tool, the portfolio simulation. It's right there. Everything's in the system for you to try different strategies. There is no doubt that running a system that works well in a back test, like in here, and then works well within portfolio simulation, when we put the real-time constraints, when I say real-time, I mean real-life constraints on the trading. If you're still ahead of the market, then you've probably got a pretty good strategy. And again, candlestick kicker was just happened to be one I tested and ran through. There are others, I'm sure. And again, it's all about how effective is the strategy? How can I trade it based upon my real life constraints? And is it going to work for me in bullish and bearish market conditions?